Hello everybody, welcome to the Fundamental Analysis webinar. My name is Troy. I'll be presenting for AvaTrade today. As we get going, let's do a quick systems check to make sure everybody's up and running okay. If you would, type okay in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure we're all up and running okay. If you would, type okay in the chat box if you're hearing me clearly and seeing the screen all right. All right, great. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. As always, keep in mind that with each and every trade you take, there's risk involved. There's no guarantee of profits with any trade that you take. That's why you should always think about the aspect of risk management as you're trading. Maybe you're using stop loss positions or perhaps using our AvaProtect feature that's available on our award-winning mobile app AvaTrade Go or on our web trader platform. AvaProtect is a unique way to protect against the risk that you have with your trades for a small premium cost. And so we'll take maybe a quick peek at that as we go along. Also, keep in mind as we're going through the webinar that it's coming from an educational perspective and not meant to be taken as financial advisement. Real quick, what is fundamental analysis? Basically, it's looking at the news. Looking at either regular economic events like jobs announcements, factory production numbers, etc. And those are types of announcements that are more regular in nature in terms of timing and scope. We can look at a calendar and know exactly when those announcements are coming. The other part of the fundamental news could be what we call extraordinary events. Those are the headlines that come that we just can't predict exactly what they'll be or when they'll be. But certainly those types of headlines occur on a regular basis where market moving information comes out with short notice or no notice when the headline hits. And you need to manage your trading for both types of fundamental news. And we'll go over ideas on how to do that as we go through the webinar. As we go along, if you have any questions, please let me know. I'm happy to answer questions or share any input that you have that you'd like to share with others. Now, real quick, what are the headlines today? What's happening with the fundamental news so that we can understand the sentiment a bit today and know if we have maybe a preferred direction. We might look for entry points for certain instruments based on the fundamental news. And so yesterday and some more today, when they say Fed's Powell, they're talking about Jerome Powell in the US, who is part of the group that makes financial decisions in the US. And so the monetary policy is guided by him and other big names in the US. And so when he speaks, a lot of times the markets listen. And what he had to say recently, yesterday, and probably some more will come out today, is basically that he believes the jobs recovery in the US, while doing well, is not all the way there yet. And so the fears that the market was having leading up to his speech were that he would talk about easing back on the stimulus programs that are there, the bond buying program, et cetera, that's been helping to prop up the economy in the US. The fear was that he would say inflation is getting out of hand, which it seems to be a bit higher than ideal because of all the stimulus. Inflation has risen faster than expected. The fear was that he would talk about cutting back on stimulus to stave that off. But in fact, what he said was the recovery is not strong enough yet, and they don't intend anytime soon to cut back on the bond buying program or the stimulus measures. And so the markets like that, and up they've gone again to new highs or near new highs. And up went gold as well in response to that as an inflationary measure. Gold is a traditional safe haven against inflation. And so if Powell is saying, hey, we're going to we're going to keep going on all cylinders with these recovery measures. Well, if they're going to keep printing U.S. dollars or loaning U.S. dollars at very low or zero interest rates, if they're going to keep with the bond buying program to free up money for banks to loan out at low rates, well then, people look at gold as a good investment then if the U.S. dollar is going to continue to weaken with all of this high inflation. And so up went gold yesterday. Now the question is, at what point will the inflation if it continues to be higher than expected, at what point will the feds in the U.S. decide that it's time to cut back on the stimulus measures to maybe slow the inflation down? Right now, they say they're not. So the U.S. dollar began weakening again, and gold started climbing again in response to that. If inflation gets to the point where there's fear again that the stimulus measures will have to be cut back, then you could see the opposite occur. You could see the market sell off and gold drop down with the USD strengthening. If there comes the point that it seems imminent that stimulus measures would be cut back. But right now in the US anyways, they say no. Stimulus measures will remain. And so the US dollar is continuing to be a bit weak and gold a bit bullish. Same story in the UK. UK jobs jumping up, the economy bouncing back, pay rising as well. It seems like a rosy picture until you realize, well, all of this is being fueled by ultra low interest rates and stimulus. So the surface looks great. Recovery seems to be going strong. The question is, at what point will central banks around the world stop supporting this recovery in the way that they are? But right now, the pound is bullish right now off of this news that pay is strong, the recovery is strong in the UK as well. And then we look at UK lenders and we say, wow, it's expected that UK lenders, the banks, will have a record rise in access to unsecured loans. Boy, that doesn't sound like the best foundation to build things on. A large rise in unsecured loans. So, if folks are getting easy loans, then you'll see a rise probably in property values. You'll see a rise in retail prices because easy money increases inflation, right? And so this is occurring all around the globe. Higher than expected inflation in the U.S., higher job pay than expected, pay growth in the U.K. Why is this? Well, because businesses are being propped up with very low interest rates, easy loans. Individuals now, they say, will have easy access to unsecured loans. It's great in the short term. It's really helping the economy open up. But we have to keep an eye on when will all of this, growth lead to inflation concerns to the point that it could cause a sell-off, maybe in the markets. And so right now the markets are rising on all of this optimism and all of this easy money and stimulus measures. We'll see what happens in the bigger picture. But right now there's some optimism on the market because of all of this in the short term. What happened with oil is a little different. Yes, oil prices have been driven up the same way as retail prices, the same way as home prices. The stimulus measures, the low interest rates, the economy's opening up have driven up oil prices, for sure. Oil prices have risen along with the stock market for the same reason. Increased demand, opening back up. Inflation on currencies causes weakening US dollar causes oil prices to go up. Weakening pound, weakening euro causes oil prices to go up. But policy measures can cause oil prices to go down, as we've seen. So, the US talking about building their gasoline reserves, but OPEC talking about at the same time also increasing production. There hasn't been a decision on that with the OPEC plus nations. They're disputing each other as to what the policy should be. So that's created some bearishness on oil. Will production increases be agreed upon or not? And those nations who need maybe oil only to be $50 a barrel in order to make profits are saying, hey, oil's high enough, let's increase production. If that happens, you can see a drop in oil, and that's why oil prices have pulled back, even with all the stimulus measures out there and the inflation that's been on the U.S. dollar. Oil prices now have pulled back down some because of fear that maybe OPEC will decide to increase production. And so in a preemptive move, many oil investors have sold off on oil, thinking, hey, they might agree on production increases, and so speculatively down go oil prices as speculators sell on oil, with the indecision around the OPEC dispute that's going on right now about whether or not to increase production. So that's the situation with oil, kind of bouncing up and down with the dispute about what to do with oil production. Here's an example of what could happen if stimulus measures are pulled away too soon. And maybe Powell in the U.S. is using this as an example of what not to do. Why he's saying he's not going to cut back on stimulus measures yet, even though inflation is higher than is ideal. The U.S. dollar is weakening quite a bit. Why are they still keeping the stimulus measures in place? It could be they're looking at what happened in China. China's economic recovery has lost steam as they have pulled back on some of their stimulus measures. They felt like they were coming out of the woods. They put maybe more restrictions back on their banks, and now we see their recovery slowing. And so that's what this headline is talking about. China might actually start to reenact more stimulus because their economy slowed down a bit from the recovery they were experiencing. They're a stage ahead of the rest of the world. If you understand, they got a handle on the virus the soonest because they knew about it first. Maybe didn't share their information with the rest of the world as soon as they should have, but they were able to surround the virus, literally surround Wuhan, surround the virus, prevent the spread across the rest of China while it leaked out on their international flights to the rest of the world. They were stopping the spread before the rest of the world. And so they were able to come out of things sooner, open their economy sooner, and then start to cut back on their stimulus measures sooner. So it's a case example of what would happen maybe if the other economies around the world cut back on their stimulus measures now that the economies are starting to roar. And what happened in China is, well, they're losing some of their economic recovery steam. And also they've had some outbreaks again in China with the virus. And so maybe this is a word of caution to central banks around the world to not eliminate the stimulus measures too soon. And so this is an interesting example that China's economic recovery is losing some steam now, and they might actually need to put back some of the stimulus measures that they pulled back on. So interesting headline there. As we look at the numbers that are coming out, we already know the UK jobs numbers came out better than expected. We see our average earnings and bonus for May up 7.3%. So better than expected jobs earnings increase in the UK. Now we'll see in the US later today, Powell will be speaking again. And let me make sure I'm on today. Yes, I am on today's schedule. Powell will be speaking again. We also have some big numbers coming out in manufacturing numbers, jobs numbers, import numbers out of the US that will kind of tell the tale. Is inflation still really high or not? As of the announcements earlier this week, it certainly has been. And so it'll be interesting to see what these numbers show. Are they still showing, better than expected numbers, inflationary type numbers? And if so, what will Powell say today about that as he's questioned by lawmakers in the U.S.? And so, just because yesterday the words coming from Powell, lent some perspective that the stimulus measures won't be cut back anytime soon, easily could say something today that raises doubt about that. And these numbers coming out also could raise doubt about that. It's really, everyone's on the fence right now as to whether is there fear of stimulus being pulled back yet or not. And every time Powell speaks and some of these members of the FOMC committee speak in the US, and every time large numbers come out in terms of economic numbers, there's the possibility of fear hitting the markets. So we've got to keep that in mind and be ready with our trading plan that things could flip in an instant. And right now we see the futures are red for that reason. The futures are red and volatility is up. Why? Because we know Powell is going to talk more. We know that what he says could shake the markets, and everybody's waiting and listening for what he'll say still. And also we're looking at those numbers coming out of the US, the factory numbers, the production numbers, the jobs numbers, etc. And so hold on tight, get your trades ready, because there could be some large movements today. Now, what we're looking at in terms of how can AvaTrade's platforms help you with this risk management? If we go in and we look at either the AvaTrade Go mobile app, which you find on our website, go to AvaTrade Go with your mobile device, attach it to your phone or iPad, etc., and you'll see that AvaProtect is available when you're placing trades. You can protect against losses on gold, silver, and FX pairings for small premium costs, and the profits are yours for defined time periods. You have no risk on the trade. The take profit and stop loss, if you program it with or without AvaProtect, the take profit and stop loss features show you, it tells you how much you're risking to your stop loss price. It calculates it for you based on your trade size and the distance to your stop loss. Same with the take profit. It calculates for you your potential profit. As you change your trade size, it adjusts and tells you what those risk numbers and potential profit numbers are. So very nice tool to use before you buy or sell to understand your risk and potential profit better. And the same is true if you log in on our main website. On this login, you'll be in our web trader platform, and it works on your mobile devices as well. So if you're not using AvaTrade Go, you can just use the web trader with your mobile device, log in, and it works fine from PC, Mac, or mobile device. Okay, and so those risk management features are in the order window on the web trader as well, with AvaProtect and the trade calculation features in the order window. So very nice features on the web trader platform as well. Since we're talking about fundamental analysis, how can the web trader platform help you? Click on these tabs, go to the Trading Central advanced features, and if you go to Market Buzz, besides the free signals you get with the analyst views and the Forex featured ideas, you get technical analysis done for you with free signals. If you go to Market Buzz, you have some fundamental analysis organized for you by instrument. So the instruments with the most buzz going on at the moment are the bigger bubbles. And so if you click on the larger bubbles, you'll find more recent articles coming out with fundamental news about them. So if we want to find out, well, what's happening with Microsoft, or no, I'm sorry, this is Morgan Stanley, or what's happening with JP Morgan. You see the banks have a lot going on because it's earnings season and they're releasing their financials, and there's been a lot of buzz about the bank stocks. You also could look at something like Amazon with a lot of articles. If you click on it, you can come up to where those articles are. And if you click on the articles, it'll take you to the full article and you can read about what's happening right now. As of 1 hour ago, these articles came out. So recent news. So the fundamental news is easy to find on these instruments if you use this feature. Very cool feature. Now, let's go ahead and get on the MT4 platform, and we'll take a look at some different instruments that might be affected by the news that we just looked at. Okay, the news that's got people on the fence about is inflation too high or not? That's really the main story right now driving the markets, and why the markets really have been kind of going sideways for a while, because we're trying to get a handle on, are the major economies going to cut back on stimulus measures or not? Because if not, then the markets keep rising because the stimulus measures have been working very well. And so if the stimulus measures are going to remain, then up goes gold with the inflation on the currencies, the weakening of the currencies with all these stimulus measures. Up goes gold, up go the markets. And if the idea is stimulus measures will be cut back, well, then probably the U.S. dollar will strengthen, pulling gold down, pulling the stocks and the major indices down. So we're at an inflection point here where are the stimulus measures going to remain or not? And so let's take a look at some instruments that are maybe tradable with the ranging patterns that have been happening and the potential breakout patterns that could come if any new realizations come about those topics. So gold is as good of any instrument as any to look at. Looking at the 4-hour candles, we say, okay, here was a resistance level right here, this red line. This was resistance, resistance. It remained resistance earlier in the week. We looked at this as a potential sell opportunity when it was near this resistance, and down it went. You actually could have collected profit on the drop, and then it broke through. After initially giving to that resistance and dropping, up went gold. And with the news from Powell yesterday that, hey, we're not cutting back on stimulus yet, boom, gold broke this resistance and up it went. So you can see how the fundamental news plays a role with the technical analysis. It's the fundamental news that caused this resistance level to break. And so we're above it now, and here's a pullback now on gold. We see over the last 4-hour candle, gold pulling back from a high of around 1835 to dropping to 1825 now. So this price level here around 1818 could serve as a natural support level now, as long as the policy measures don't change, right? If Powell comes out again today and says, no, we're still not cutting back on the bond buying program, we're not cutting back on stimulus, then this price level here should not be broken. It should act as support, because the reason gold went above that price level is because that's exactly what he said yesterday. So as long as he doesn't change his tune, if the policymakers don't change their tune on stimulus, then likely gold stays above this price and bounces if it tests it and climbs higher. If Powell comes out and says, you know what, inflation is too high, I changed my mind from what I said yesterday, maybe we should cut back on the bond buying program sooner rather than later. If he said something like that, then this support level would break most assuredly, and we'd see gold go flying down, right, to this support level down here. And all it would take is a shift in the way he says something that makes investors get spooked. Okay, it wouldn't have to be an all and out change of his mind, but it could just be the way he says something could cause this support level to break. That's how on the fence the market is right now about what are these stimulus measures going to look like moving forward. And so this is where you look at this price level and you say, that's an important price level then. It was resistance for a reason. It broke through and became support on this next candle here for a reason. And so in terms of technical analysis theory, that's an important price level, and there's a fundamental story behind why this price is the important price level at the moment. So it looks like gold's trying to bounce back down. We can see the volatility index is up today. The futures are red, so there's some fear kicking back in because they know Powell's going to talk again today. And so there's some antsiness about what he might say. But until he says something different from yesterday, as gold pulls down, you might find that it will bounce off this support level. So what kind of pending order could we put that would buy just before this support level down here if gold drops, say, to 1820? What kind of pending order would buy from 1820, let's say? Is it a buy limit, buy stop? What kind of pending order do you have to program in the MT4 platform? And by the way, if you're using the web trader platform, all you have to do is pick buy from and put the price, and it makes it the right type of pending order. Yeah, correct. It's a buy limit pending order, buys from a lower point. So on the web trader, you would just say pick buy, put buy when price hits, and put the price you want to buy from, and it automatically would make it, if you put a lower price, a buy limit. If you're on the MT4, you need to tell it to be a buy limit in order to buy from that price. So as an example, if we're saying, okay, we think there's some inflation fears still, because the stimulus measures, according to Powell yesterday, are not going to be taken away anytime soon. So fundamentally, gold should go up. And we found a technical support level here that was an old resistance level from the past week that has become support on this candle here. So if gold comes back to that support level, that might be an opportunistic spot to buy. So 1820 could be a price that looks opportunistic to buy from. You might put your stop loss just below that, below the support level, to have limited risk. Maybe you say, I only want to risk $5 per ounce, and your take profit could be back up at today's high around 1834. Okay, a little scalp move. So $14 potential profit, only $5 potential risk per ounce. So almost 3-to-1 ratio on that position. So there's a nice pending order. So now we've created a pending order. Let me get rid of some of the lines I drew so that you can see it better. Objects list, and you just delete the objects, and that gets rid of everything you drew. Okay, so here's our support level right here. I'll draw one line right here. So that red line is our support level, and our buy position will trigger just before that if gold drops to that support level. We give up on the position if gold breaks the support level, because then we're assuming there's a downtrend coming. And maybe you say, okay, I don't want to get caught on a false breakthrough, so maybe I'll slide my stop loss a little further down. Okay, so it really has to break that support to give up on it. And I still have a 2-to-1 ratio, or even better, potential profit to risk. Okay, and I like to do that sometimes after I open the trade. I look at the candles and I'll say, you know what, maybe I'll adjust my stop loss and my take profit slightly. Maybe I'll bring my take profit down just a little so that I'm just below today's high, so that if today's high acts as resistance, I can take the profit just before that resistance, before it has a chance to reverse back down, if the buy position triggers here. And I still have about a 2-to-1 potential profit to risk setup. So technically speaking, it's a nice trade, buying from right above a support level. And fundamentally speaking, it's a nice trade because we know there are inflation fears on the USD causing gold to be bullish, which is why it broke through this resistance in the past day or two anyways. Okay. Any questions on this, comments on this potential trade setup? Yes, I'm with you. The fear right now is strengthening the USD, pulling gold down, right? Temporarily anyways, the volatility index is up, the fear index is up, which is why gold is pulling back down right now. Okay. The question is that fear going to be temporary or permanent? And if you say, well, what if the fear just keeps building and gold breaks that support and plunges? Well, okay. What if a headline comes out that flips the environment? What if a headline comes out that says FOMC committee in the US considering scaling back bond buying program sooner rather than later? If that headline comes, remember we said there's two types of fundamental news, the scheduled kind and the unexpected kind. And so what if that unexpected headline comes? What if the opposite of what Jerome Powell said yesterday, a headline comes to confirm the opposite of what he said? What if something comes out from some other FOMC member that says, no, we disagree with him. We are going to cut back the bond buying program in the US. We're going to scale down stimulus. If that headline came, then this support level would break in a hurry. What kind of pending order can we back up our buy position with that would sell if this stop loss gets hit? We could sell from this price if the support level breaks. At the same time we're buying, we could be ready for that market reversal with a pending order, which would be a sell stop, a pending order that sells from a lower point. So The same time we prepare a buy limit to buy if we get near that support level because we believe fundamentally it should bounce up that support level, we could say, you know what, we know that news can change in an instant. And so while we prepare to buy limit, we can also say, I'm smart enough to know the news can change. I'm going to prepare a sell stop as well. So if gold does drop and hit my stop loss down here at 1811, well below that support level, not just that it tests the support level and breaks it by a little bit, but if it breaks this support level at 1820 and comes all the way down and hits my stop loss on my buy at 1811, then maybe that's the price I decide I'll sell, because that established that something changed in the momentum. And then my stop loss then would be back above 1820, maybe 1822 to my stop loss. So I'm risking $11, or let's say 1821, I'm risking $10 to my stop loss. And now at this point, if something major changed and caused a support level on gold to break, then maybe I expect a crash in gold temporarily, and I could look at a take profit at 1750 or 1755 if gold really had a big reversal. Okay, and so with Powell talking again today, there's a potential for him to say something that really spooks investors. And so I've got a sell stop prepared at the same time that I actually believe gold will bounce up off this support level, which is why we have a buy limit prepared here. But then we prepare a sell stop down here in case we're wrong, right? In case something changes unexpected. And so then there we are. We've got a 1-2 setup. We see gold pulling back with the volatility index rising today. And so we're prepared for gold to drop to the next support level, and then prepared to buy from that support level with this example. And then we're also prepared to lose on that with a limited risk and get in the opposite direction if a downtrend is established by this support level being broken significantly. Okay, so go with what you know, prepare for the unexpected. That's what this strategy is with these 1-2 setup with these trades. Preparing for what we know. We know there's inflation fears and that the stimulus should be there in the short term to keep inflation somewhat high. And so we know gold, maybe as the #1 inflationary safe haven, should continue to be bullish. So we prepare a buy limit based on that fundamental knowledge. But we also prepare a sell stop for the unknown, because you don't know when that unexpected headline might hit. If we look at oil, we talked about why oil has been dropping. Okay. First, we talked about why oil went up so high, above 77 a barrel. And then we talked about why has oil pulled back, because there's some bickering between the OPEC nations about are they going to increase production or not. And there's some thoughts that some major oil producing nations would like to increase production because they're well beyond their profit per barrel price point. If their price point's $40 or $50 a barrel, to be above that to make profit, well, oil being in the 70s, hey, they can increase production. Even if oil drops to 60 a barrel, they're okay. They're probably making a larger profit with that higher production with a slightly lower price. So, and then there are other countries who maybe would prefer the higher price because they don't have the high production capabilities. They're better off with the lower production. And so at some point, the OPEC nations and what they call OPEC plus nations, they may just split. Some of them will say, that's it, we're increasing production regardless of what you do. Good question, Abiki. I'm sorry if I'm mispronouncing your name. Is there a correlation between gold and oil? And my answer is sometimes. And so it depends why the prices are moving, right? If oil is dropping because the US dollar is strengthening, then yeah, there's a good correlation because gold drops when the US dollar strengthens, right? As gold is a safe haven against a weakening US dollar. So if the US dollar is strengthening, then people rush out of gold and, oh, Abby, okay, that's easier to say. So if the US dollar is strengthening because inflation fears are disappearing. Then gold tends to drop with oil. But if the US dollar is not strengthening and oil is dropping simply because of an increase in production, then that's where the correlation maybe is not there. So it depends on why the price is changing, whether or not the movement is correlated. So in terms of US dollar strengthening, yeah, movements are correlated, gold and oil. In terms of economy's doing really well, and so oil price goes up when the economy's doing well. If the economy's doing well, and there's demand for oil, oil could be going up while gold is dropping, because maybe the US dollar is not inflationary anymore, so gold drops, but there's still high demand for oil, so oil goes up. So they don't have to be correlated. It depends on the reasoning behind why the price is changing. Very good question. What you might see a stronger correlation between is specifically something like the Euro USD and gold, right? As the US dollar weakens, gold goes up and so does the euro. As the US dollar strengthens, gold goes down and so does the euro against it. Okay. Diva, good question. Most of the what we call precious metals tend to be correlated with the US dollar. Okay. If there's fear that the US dollar is becoming worth less, not worthless, although some might say it's becoming worthless, if there's fear that the US dollar is becoming worth less, meaning that there's inflation on it, silver, gold, platinum, palladium, they all tend to have correlation that they go up in value as the US dollar weakens. And as US dollar strengthens, what they call the precious metals tend to then go down together as the US dollar strengthens. Very good questions. Okay, so crude oil, we're looking at a chart here, and you see I have a take profit line here. You say, what is that from? That's from a pending sell limit that I have at a higher price. Okay, and we looked at this for the past couple weeks. If we go to 1 week candles, we can see here's my entry price up here on 78 a barrel. We almost hit it. The price hit 77, right? We hit it once recently, a couple weeks back, and there was an easy profit on a sell from this price up here on crude oil. I'm on the 1 week candles now. So you see we've dropped off in the past couple weeks from that high price. Why did it drop so adamantly, so strongly from this price point? Look over here on the 1 week candles. We see that that's a resistance point from 3 years back. That's the advantage of looking at the larger candles sometimes. You can see resistance levels and support levels that you wouldn't otherwise see. And so when we look at the 1 week candles, we can see that indeed, when the price got near this price over here, it plunged. That was back in 2018. And if you follow that price over, that's exactly where we dropped from 2 weeks ago. So we had sell limits set up a couple weeks ago that did great from that price. The price of oil hit that price and down it went. It was a natural resistance level from 3 years ago. Now the question is, this current drop off, where will that subside, and will oil go back up towards that resistance? As soon as OPEC decides what they're going to do, then we can understand better which direction oil will go. I would say, trust me, the OPEC nations don't want to crash in oil prices. In general, they like higher oil prices. So I don't think they're going to do anything too drastic with production to cause oil prices to plunge below the price points that they want. It doesn't mean oil can't push down further. Looking at the 1 week candles, I see a support level here. Okay, that's a support level on the 1 week candles for oil, which is down around 68 a barrel. So we could see a further push down of $3 or $4 in the price of oil before it reaches this support level. So oil easily could drop more before it rises more. Even with the economies doing so well, increased production agreements could push oil down further. With that said, I like this pending order up here to sell if oil does reach that 78 range, because you see what happened the last 2 times oil reached that level. It dropped recently from that price, and it dropped 3 years ago from that price. okay? And so this pending order is there for that reason. Now, in the short term, let's look at the smaller candles. I'm on 15-minute candles. Are we reaching a point where oil might bounce back up? Because after all, the economies are doing well. We just looked at great news out of the UK. The economy is doing great. Jobs are doing well. Income levels are going up. Retail demand is there, etc. All of that's good for oil prices. So beyond the bickering that OPEC has been having, fundamentally, there's a reason why oil should not keep breaking support levels and maybe should bounce back up. So a market move to buy on oil, it's even though oil's been pushing down and we don't know what OPEC is going to do, technically speaking, these support levels look nice when you understand that that the economies have really been opening up and doing well, which means that should create demand for oil, and oil could be bullish. So I've created a simulated buy position. I put my stop loss below the 1-day candle wicks here, below this little support area on the 1-day candles. Stop loss is down here. And so where would I put my take profit if oil bounces back up, at least to this spot here? On the 1-day candles, it was just a couple days ago, oil was at 75 plus. So you don't even have to break that resistance to go after a nice profit on crude oil if you're bullish on crude oil in terms of what the economies are doing with all the stimulus measures that are still there. That's really what drove oil up, and the stimulus measures are still there. So as long as OPEC doesn't do anything drastic, maybe oil bounces back up now. Okay, and so you can take a shot maybe at oil not breaking the support level that we see on the 1-day candles right about there. Okay, support, support, support. We see oil with several attempts not breaking 70, 71-ish per barrel. So with your stop loss below that on crude oil, that could be a spot that maybe you get a bounce on oil up to this resistance to take profit before it breaks that support and hits your stop loss. Franco, good question. You're asking why is the dollar indirectly related to oil, or I'm sorry, to gold prices more than the euro or other currencies? Could be related to the fact that in the past, gold, the U.S. dollar was gold backed. It isn't anymore. The U.S. dollar has become more of a fiat currency now, where they can just print more without having an equal value of gold to back it up. Initially, the dollar was backed for every dollar that was printed was backed by an equal value of gold, and so it kept the dollar tightly intertwined with the value of gold. That's not the case as much anymore, but gold is still very much tied to the value of the U.S. dollar, out of tradition and also out of the fact that the U.S. holds a huge amount of gold in their reserves to back the value of the dollar. So there's some relation there, but traditionally gold is traded with the U.S. standard, I guess, is the way that you can look at that. Now, but that's not to say that if there's fear of the euro having inflation or fear of the pound having inflation, etc., it doesn't mean that doesn't correlate to gold going up. It does. It absolutely does. There's correlation between any major currency having too much inflation and gold going up. Very good question. Okay, so this is a nice little support level then on the 1-day candles for oil. If you're bullish on oil, I've simulated a move that might make sense technically to buy on crude oil now to take advantage of the large drop that oil has had in the last couple of days, and hope that on a buy position on oil, you hope that OPEC finally agrees soon that they're not going to increase production yet, and then you'll see oil, if that's the case, you'd see oil go flying back up, and you've got a small risk here to go after a much bigger potential profit. Okay, we could look at some of the indices. We're running out of time here a bit, but we see still very bullish on the indices. They keep reaching new highs. We see the US Tech 100, otherwise known as the NASDAQ, just out of control climbing, right? The question is, when might that slow? And if we go off the one-day candles, we see that today it's having some resistance, okay? On the 1 hour candles, we see a resistance level is formed. Resistance, resistance, having trouble breaking the all-time high up here, at least in the short term. Why is that? Well, Powell's going to be talking more today. If he insinuates anything about cutting back on the bond buying program, you could see this resistance level hold and a strong drop. Now, he's already alluded to the fact yesterday that they're not going to do that. So if you hear more of the same from Powell today, you could see a repeat of another all-time high coming and this resistance level breaking. So where could you put a buy stop pending order to wait and see if an all-time high is reached again before you buy? Right up here. You could put a buy position, a buy stop pending order up here. If the all-time high is broken, then boy, there must be more bullishness, and you could buy with that confirmation of a breakthrough of this resistance. You could have a buy stop pending order up here. Okay. The same could be true. You could put a sell stop pending order below this support level down here. You know, if this support level breaks and we start getting down into, 14,760 range, then maybe something changed. And so you could have a sell stop pending order down here. Otherwise, it's ranging. The market is ranging between this high and this low down here. This is your support level on the 1 hour candles. This is your resistance level. We've got a tightening snake here. The high points are getting lower. The low points are getting higher. This range is narrowing. It's getting tighter and tighter. Pretty soon you're going to have a breakout one way or the other. And this is how I view the major indices right now, especially the NASDAQ, waiting on what is Jerome Powell going to say later today. That's why the market's tightening. This ranging movement's getting tighter and tighter, and it's either going to break out and hit your buy stop up here or break out down and hit your sell stop down here. So I think maybe that's a move that could make sense today, to have a sell stop somewhere down here ready to sell if it becomes a big downtrend, and a buy stop somewhere up here ready to buy if it becomes a strong uptrend. Okay, and you could do that setup on any of the major indices right now, especially the US indices, with Jerome Powell having more to say today. All right, everybody, thank you for joining. I think we'll see some big movements today as Powell has his testimony continue. And I think you could prepare in a fashion like I've simulated here, with some market moves and some pending orders, just waiting for those big potential breakthrough moves. All right, everybody, good luck with your trading. Till next time, make sure you're managing that risk, and obviously go after what you believe will happen here. All right, bye for now.